G'day everyone, welcome back to Pete's Investing. Today's June 27, 2023. This is the US S&P 500 update. On our weekly, we're in a bullish momentum. However, on the daily, we're broken out into a bearish movement. It's broken down below this trend line. We'll have a look at that in a minute. As well, our target area for the divergence has been hit, which is a positive if you're trading that on the side. So just looking at the big picture here, we can see there we had a going back to a bit of history, we had a bit of a bearish divergence back here, telling us to be careful about going long, although the price did continue to go to the upside. The CCI was weakening, and it showed us a couple of areas where it did eventually fall. Now, for this to have executed the trade on this weekly, we needed to see we need to draw a channel in the same period as that divergence there. So it would have been from there up to that one, down to that area, and for this to have gone short in alignment with the bearish divergence on the CCI, we needed to see the price break at that point to start declining and breaking below that channel. It didn't do that, so we kept going on with the long positions as it was indicated by our indicator down here. Now there was another area here where it started showing a bit of a bearish divergence versus the price, and again that would have been a continuation of this channel, and ultimately it did break below the channel as it did there, and that's where you would have entered short in a longer period and to go short on the S&P, and it's been declining since then. It's currently stabilized in the last, since the start of 2023, but that's where it started going short, and we're starting to see some weakness as well moving forward. Now on the daily, it did bounce off this support at 38.08, hit this resistance at 44.40, and bounced down there from there and hitting this diagonal ascending trend line and broken through there as well. Now you'll notice on our indicators it's showing a bearish signal, so predominantly short trades based on the daily. However, just be mindful the weekly is still showing long, so it's uncertain at the moment, but it looks like we may start seeing a bit of a weakness in the US market. On the hourly, there was a bit of a few divergences playing out here. On our last video, we did emphasize this flat divergence between those peaks on the CCI versus this bullish divergence on the price chart. And we've also seen now more recently another bullish divergence on the price chart within that range, and a very bearish scenario there on the CCI as well. So the way you would trade that little area is when the channel breaks, again when the price breaks below the channel, and the channel is drawn for that divergence range only. It break below there, and we draw a initial target area of, in this case, the closest Fibonacci range between that recent low and that high, and that was the 38% to the 50%. It took a number of days to get there, but it finally broke through there in the last few days of trading. Now we may see further declines, although you'll see there is a bit of a upswing on the CCI, so just go carefully. Avoid going long or short at the moment until we get more consistency in the weekly and daily trends. We want to see either both going long or both going short. At this point, they're a bit uncertain, although these divergences can still be played in isolation, and this one has actually worked and hit our target area. So to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.